The stock market closed much lower today over growing fears of a recession. The S&P index was down around 1%, and at one point the Dow dropped more than 500 points. Commodity prices have risen with fears the price of gas will continue to climb. The biggest drop on the market was among banks and big tech companies. Joining us now is Jay Richards, assistant research professor at the Busch School of Business at the Catholic University of America. Jay, welcome back. Good to see you again. A lot to unpack here, but first, I want to talk about that cyber attack on the Colonial Pipeline, which we reported on earlier. Can you talk a little bit more about that and the impact that this will have and is having on gas prices and also the trickle-down effect?
Yeah, I mean, gas prices are the obvious thing. In fact, for the last several months, gas has been going up, in part for good reasons. I mean, there's increased demand. People are traveling, they're getting out, unlike a year ago where everybody was sort of locked down. So it makes sense that with increased demand for gas, the price is going to go up. But of course, the cyber attack on Colonial Pipelines it happened at the worst possible time. We're talking about 45% of essentially the oil and gas on the eastern seaboard. It's a sort of thing that's going to take a while, I think, to get back up and running, even if the pipeline starts going next week. And so I think it's really safe to say that the price of gas, certainly at least in the eastern part of the country, is going to continue to go up for a while.
And Jay, I want to look at the stock market, going back to that. Can you talk a little bit more about why there are all these fears surrounding a recession?
Well, if you remember, just a year ago, we were looking at 41 million new jobless claims. So we had started the year with record low unemployment, massive increases in unemployment, and then you would expect this to sort of be roaring back to normal. Unfortunately, the April jobs numbers were very disappointing. There have been a few 100,000 more people trying to get into the job market, but really not a whole lot of people getting new jobs. The question is, okay, why exactly is that happening? Partly, it may be because of political incentives and economic incentives, because of increased unemployment benefits, for instance, ironically, which just discourages people from getting back to work. But also, there's just massive uncertainty. I mean, I think what the president ought to be doing is looking at what's happened in Florida. We know now that lockdowns don't work. They don't actually reduce the spread of cases of COVID-19, but they absolutely depress the economy. And they keep entrepreneurs from being able to make plans. And so what we really need to do is open up the rest of the economy and then let the fundamentals of the American economy take shape. I think there's nothing wrong with the economy fundamentally, but the reality is that it's massive uncertainty, the continued lockdowns, the mixed messages from Washington about what we're going to do in the next few months. I think it's just dramatically depressing the economy, and we're seeing it in the stock market. And I think that's the sole source of this fear of a coming recession.
Jay, if, there is a recession that's imminent here, is there anything that we can do, personally to sort of protect ourselves and our families?
Yeah, absolutely. I mean, the reality is you should always have a little bit of flexibility in your income. Or any time a recession happens, you can end up either with reduced number of hours or without a job. And so you definitely want to build up a bank. I mean, a lot of preppers think, okay, I want to have enough food in case there's some kind of natural disaster. Well, the reality is you ought to have a buffer in your checking account, in your savings account. You don't want to be overextending yourself, a lot of consumer debt and things like that. Just basic good financial prudence. I mean, I'm praying that this is not going to happen because it's the last thing we need is to have a recession right now after the COVID pandemic and the lockdowns. But the problem is, I think quite realistically, it could happen unless jobs start being created and unemployment starts going down significantly.
Well, Jay, before I let you go, any final thoughts or words of advice?
Absolutely. I mean, I think a year out from the lockdowns that started a little over a year ago, we actually know a lot. We didn't know what was happening in March of 2020. We know what's happening in May of 2021. We know that the lockdowns generally don't work. We know that states like Texas and Florida in particular that have opened up their economies have not harmed their populations in any way in terms of health, but have certainly improved the economy and human well-being. I think the country as a whole needs to take guidance from what's happened in the state of Florida in particular.
All right, Jay, thank you so much for your analysis. Always appreciate it. Jay Richards, assistant research professor at the Busch School of Business at the Catholic University of America. Thanks again.
My pleasure.